I spent over $4,000 on this. This is me spending money. Got to expo the mining farm. I got a really interesting question, and it was just kind of like, Vosk, why are you mining Kadena? So this is a Kadena miner. This is another Kadena miner. I got another new Kadena miner last week, and I had one prior to that. Actually, I got a new one the week before that. But why? This is the Bitmain Antminer KA3, 173 terahash second version. This is the best Kadena miner in the world still. It's an ASIC miner, right? It mines the Kadena mining algorithm only, Blake 2S. This is a purpose-built machine. It's a custom computer. You plug in power, you plug in Ethernet, and then somebody somewhere told me that it was just that easy to earn passive income, huh? So this is where we're gonna get even crazier. I'm not even gonna test this thing. Oh, I hope this doesn't go wrong. And I'm gonna dunk it. I got one more spot to dunk. Yeah, it's gonna be pretty hard to try to warranty this thing out if it's broken for some reason. Got the exhaust fan cut in, which is way overdue. Intake vent over there. Huge pain and not the right decision doing this after the fact, right? But we've got 6 miner unit, 2 miner unit, 2 miner unit, 6 miner unit, 8 miner unit, 2 miner unit. We have a lot of machines in here, okay? I'll pop it up on screen how many miners I just said we had, so I don't speak and mess it up. But one thing in particular, right, and we're still dealing with some leaks on our bixbit immersion systems. They're leaking at the dry coolers in multiple spots. But they're very small leaks. Systems are functioning, and especially given the market conditions, we need these to go. We need to let them rip. And furthermore, they've been dunked. It's a very big hassle to undunk a miner. Something I, to be frank, just simply will not be doing. I kind of view dunking a miner as, like, in a way, laying it to rest, or like this is your final post. You're going to be a watcher on the wall, dude, just like Jon Snow. But I don't think you're going to have a whole story about you, unless you count this video. It'll kind of sound ridiculous and random. But here's the point. bixbit outfitted this to be a 2 miner unit, but with a quick customization, I can make this a 3 miner unit. And I already talked more about that recently, but I just wanted to elaborate kind of what I'm doing with my KA3 and where it's going. What I really want to talk about, other than, you know, a couple of these quick updates here along the way, and just show you the dunk action, is my mindset and strategy for mining Kadena in particular. So I'll talk more about that behind the screen. Let me put the camera down. I'm going to go to Dunk City, and then I'll pull up more data, and we'll look at the fundamentals, and I'll just explain why I'm doing this. But enough talk. It's dunk time. I'm not talking about Dunkaroos. They're overrated. That's why they were discontinued nearly. Yeah, I said it. I said it. What are you fight me through the screen? Nice try. So, when I asked what the little standoff pieces were that bixbit was using, they wouldn't tell me. They said I should have enough, and instead of just going back and forth, I was just like, whatever, dude. And so I did some research. Some people in some Reddit thread years ago said the M4, and I'll put a screenshot of the exact listing I bought off of Amazon up, but I was like, well, what if I just use motherboard standoffs, because I know that they can screw into each other. So I've just kind of mimicked the sizing approximately that they're using. And I can confirm that I can just leave these other screws in, and they will screw into the fan slots. And I hope it'll work, right? It's what I don't know is, like, are these too weak? Are they gonna shear off? If I'm gentle with it, should be GTG, good to go. And if you're really lazy and really trying to cheap out, you could try to do just 2 and put them in opposite corners. It's a bold play, Cotton. Bold move. The most critical note for me here is just making sure I'm not, going in too deep and hitting a hash board or something. I'm not though, so there it is. So we'll run with. Let's try. So since I dunked a third miner, the fluid's too high now. So I'm draining some of the fluid out of the enclosure. In this 5-gallon immersion bucket fluid panel that I'm using, that we previously emptied it all out of, it's pretty close to being completely full. So I'm watching it closely to hopefully not let this overfill and then go everywhere. Oh shit, that was so close. And another one's in. Worst case scenario, if I start sucking up too much juice, then I can put an underclocked Bitcoin miner in here and basically swap it from, swap a KA3 from in here, put it in the 6 miner tub, because I am a little bit over where I want to be, and the system will probably consume another amp or two on really hot days. I want it to be at like, well, 40 or under, and I'm a little bit over, but I'm good. Still good so far. I just worry about the future. So 3 miners, 3 KA3s in freaking Dunk City, baby. I hope this works out, because you look at that miner minus 4,000 something dollars that I just paid. Only the 166 model is the KA3 that I've had for about a year or so, which I guess is right here. I'm not quite sure what happened along the way that made this immersion fluid in this tub in particular so murky. Shout out to the Heroes of the Storm character. We got more data, so let's check it out. Remoting into these miners, we can see 3-day uptime. It's been 3 days since you last saw me. Well, actually, it's just been a couple seconds, but it's been 3 days, and you would never know because I'm wearing the same shirt like a cartoon character. So this is a 173 terahash a second KA3, and let me zoom out a little bit. We can see the performance here, right? The temperatures are reversed because the cool fluid is actually coming in through the outlet side. Normally, if this was an air-cooled miner, inlet would be the cool side, outlet would be the hot side. This is the other KA3 that we have deployed out there. Again, 3 days of uptime. We see that cool fluid coming in at 54, going out at about 70. And so the miner that is on the bottom, the third one, the most recent addition, and kind of the whole point of this video, right, is actually achieving better temperatures than the other 2 miners. I'm going to fixate on comparing these two because they're the exact same model. They're both out of the recent production batch from Bitmain. These are 2 brand new KA3s that I've gotten over the last couple of weeks, and they went straight from the box into the tub. Although I haven't been having good mining performance on F2 pool, I haven't messed around with mining pools on my KA3s yet, so they're just going to be there for now, but this is really good data to have. But here's the thing I'm the most excited about. The fact that all 3 are in there, all 3 are working, and we're pulling around 42 amps. So I'm a little bit higher than I wanted to be, and I think that amperage will increase another couple amps on really hot summer days. So we'll just have to see where that goes. But again, I've got my contingency backup plan of taking one of the KA3s out and putting it in one of the other tubs, and then putting a Bitcoin miner with a lower power consumption in here to kind of band-aid that. In some of these tubs, I have excess electricity capabilities, and in this one, I'm definitely pushing the boundaries. But my simple, smooth brain loves having 3 of the same miners in there. Makes me want to just slap a big Kadena logo there on the side, or paint the side of the tub or something fun. But that's a quick kind of crash course on the performance of the Kadena miners, the K3s so far. But I want to talk more about why, right? So we're going to compare a couple of things. In particular, right, we look at Kadena. Since its recent price increase, it's nearly a top 10 proof of work coin by daily emissions. It's close enough. $90,000 per day. And although all of these coins look red at the time of recording this video, with a severe impact on CKB mining profitability, which I'll talk about in the why I bought 12 miners for better and worse video, Kadena, right, is putting out about 1.34 Bitcoins a day. That's about $90,000. It's hard to appreciate with this terrible network hash rate chart due to these spikes, which are not additional miners. My understanding is they're blockchain / node / mining pool errors. About a year ago, the network was sitting around 600 to 700 petahash a second. And right now the network is at about 900 petahash a second. So the network difficulty has increased about 50% over the last year. It's become 50% more difficult to mine the same amount of Kadena coins. Kadena does not have a halving like Bitcoin. That's pretty critical information and something that many people don't know or understand. Their emissions smooth out over time. Basically, it linearly reduces. Kind of like Kaspa. Kadena kind of looks like Kaspa, at least after their rebrand, right? So I like this. I like smooth rewards over a long time, right? Or getting into mining a coin right after it halves, depending on what the outlook looks like, which that's actually similar to our strategy with Nervos Network CKB. But on the topic of Kadena, right? Kadena is ranked 199 on CoinGecko out of all cryptocurrencies by CoinMarketCap. Kadena has a market cap right now of $400 million, trading volume of 23 million. Still not on a major cryptocurrency exchange I want to see it on, which is Coinbase. We look at its price compared to all-time high, it's still down 94%. So yes, there are more coins now. So to hit the same all-time high would be a higher market cap. True for pretty much every cryptocurrency that's been existing since the last bull run. This is up significantly from its lows just several months ago, about half a year ago, where it was trading around 40 cents. Honestly, pretty depressing time as a Kadena miner and a Kadena hodler. I did not have a big Kadena mining footprint though, which is a critical reason why I wanted to expand it as of late, hence literally this video. That question of what are you doing? Why are you mining this? Well, let's just take a couple snapshots. Kaspa's been so hot lately. We look at Kadena, $400 million market cap, $1.58 a coin, down 94% from its all-time high. Kaspa, $3 billion market cap, right? Down 30% from its all-time high that it hit just 27 days ago, not in the previous bull run because it wasn't really here then. But the big pro of Kaspa, right, is that like it hasn't seen a bull run yet. And that generally is a really good thing for most cryptocurrencies that have good momentum going into a bull run. But you really could say that the bull run has already happened for Kaspa in a way. It's got a $3 billion market cap. 3 billion divided by 423 million is about 7. So if Kadena ascended to the same market cap of Kaspa right now, it would 7x. That means it would be putting out over $500 million in daily mining rewards. That means that my miners would go from making $54.50 in the last 24 hours, even though all the mining profitability calculators say I should be making over $20. Because remember, I have a couple more terahash a second than the 166 model shown in this AMV screenshot. But the point is, we made 54, let's just, let's be generous and round it up. The 55 divided by 3. So we mined about $18 per mining rig. We round down, we pretty much get right back to the exact same number we're supposed to be at. 18 times 7, we'd be making $126 a day per miner in retrospect. sometimes we do moon math like that, and people will laugh at me in the comments, but like, dude, you build, you mine, you buy, you stack, or at least I do, right? It's not financial advice. You do whatever the hell you want to do in a bear market, in the beginning of a bull run, and then hopefully things go crazy, they go parabolic, and you got yourself a war chest. If we look on the mining pool, it's registering about the mining performance that we should be expecting to get here. I need to mess with my worker names. I hate the way the F2 pool condenses on my worker names. It's not how I have them typed. It's not taking the underscore. But we see 173, 160, about 170, and then about 170 here as well. This performance right here is particularly odd because this is a 166, so it's performing better than it's supposed to. And then the 173 is performing worse than it's supposed to. And then the latest 173, in the last 24 hours is performing exactly as it's supposed to. You can see I've got 2 full days of mining earnings with all 3 of those online here. And I'm mining about 34 coins a day, which makes me more confident in looking at those numbers the way that we just were. Per token unlocks, Kadena has about 27% of its coins unlocked, basically out there in the ecosystem. Over the last 7 days, it's emitted nearly 1 million Kadena, or about $1.33 million worth of coin into the circulating supply. Kadena, again on the rebrand, new website if you haven't checked it out at all recently, powering the human layer of blockchain, whatever the hell that means. Welcome to Layer H. There are no Layer 1 or Layer 2 solutions capable of scaling to serve all of humanity, but apparently Kadena can. Dropped its pink shirt and now it's teal. It's founded by Stuart Popejoy and William Martino, who created JP Morgan's first blockchain. Their advisory team includes Dr. Stuart Haber, blockchain co-inventor and one of the most cited authors in Satoshi Nakamoto's renowned 2008 Bitcoin white paper. So it's supposed to be scalable proof of work blockchain, this and that. I will say, to add to Kadena's credibility, as you see here on their Twitter, there are some projects that have been building on it and actually been building on it for years now. Benefit of being around for a while, like Crank. Crank wanted to be a Helium HNT alternative, especially when Helium was focused on IoT. Helium went and abandoned all of their IoT people. It was one of the most unusual cryptocurrency moves we've ever seen as they pivoted towards 5G, leaving myself feeling burnt among many others. But Crank is there to try and pick you up and provide an alternative, which is a much better blockchain than Helium could ever build. And then they actually just gave up on building a chain and decided to become a Solana meme coin. The irony. So these are just some of the highlights of what I kind of see here with Kadena Mining and why I want it to be a critical piece of my mining farm. I don't think these miners are all that expensive for what they're doing. So if I can get better mining profitability on another mining pool and I'm actually getting about $20 a day of profit, right, times 365, and that's at a 10 cent per kilowatt hour electricity bill, that's a very good break-even projection, right? Earning $7,300 after I pay electric on a $4,400 miner. Huge shout out to ASIC Marketplace because that's where I got this KA3 from. I got it quick. That miner has been performing well, and I'm very happy to work with them. It's really just been a good experience building out a lot of my mining farm with miners from them. Maybe you're like, I'll just go to Bitmain. No, you won't, because they're sold out. And they didn't even list their recent batch of 173 terahash a second. It went straight into the reseller market and whatever else. And you may see this older price point here on their sold out products and think that, oh, the AM price isn't that good. But these miners have not cost $3,600 since Kadena's gone up over 42% in the last 30 days. If we look at just the 3-month chart, 3 months ago, Kadena was trading at about 70 cents. It's increased significantly since then, and so have the miner prices. People are so quick to forget that as long as a new miner model doesn't come out and absolutely obliterate the old one, a lot of mining hardware that's bought at a good time appreciates significantly in a cryptocurrency bull run, where if you want to, you can not only take profits on your coins, but also on your hardware. For me personally, once I dunk these, they're dunked for life. And that should also illustrate how I feel about Kadena and Kadena Mining long term. I'm a huge advocate of proof of work coins. So understand I have some bias there. I want to see these projects succeed. And I'm quite literally putting my money where my mouth is by investing more and more time and money into the VoskCoin mining farm. We also just reviewed the IB-Link BMK3 Mini, which is the best mini miner for Kadena. So if you're intrigued by this project for any reason, but you have a lower budget, these are great because these little mini miners, you get, you know, like a Antminer APW7 power supply is what I have it plugged into, or you could use an ATX gaming, you know, PC power supply or whatever. Like most power supplies that you'll find can supply 300 watts of juice. I've got one, it's performing well, plugged in, it's better than the gold shell Kadena miners. And I actually run it on the low power mode, so it's only 170 watts at its best efficiency rating of 3.5 terahash a second. So I think that's cool, and I think that bodes well for building out the decentralization of the Kadena KDA coin mining network. So that's my brain dump on the subject. Let me know your thoughts on Kadena Mining. I think a lot of people are so fixated on Kaspa, they're quick to write this off, but I don't lose sight of the market caps, right? Is Kaspa really gonna be a $10 billion plus coin? Maybe. It's gonna need some serious ecosystem growth to be able to support something like that. I think we could see a 1 billion Kadena much sooner, much easier than we may see a $6 billion Kaspa market cap. But hey, I'm still adding Kaspa miners too. On that note, I'm gonna close it out. 10 seconds of tails. Thanks for watching. Hit the thumbs up, share the video with a friend or an enemy, whatever, views of you. I'll see you on the next one.
Shine.